All right, let's get right into it. You've seen the headlines, right? Tensions with Iran are flaring up again. But what if what you're seeing on the news, well, what if it isn't really what this is all about? In this explainer, we're going to break down a really fascinating analysis that says the real conflict, it's not about politics or ideology. It's about following the money. And for anyone who's paying attention, it actually lays out a pretty clear financial playbook.
And that's really the core idea here. The argument from our source material is that if you want to truly understand what's happening, and more importantly, how to position yourself financially, you have to look past all the official statements, all the noise, all the propaganda.
So where do we even start to unpack the real story? Well, the first clue is to just look at how the public justification for all this military action keeps changing. It's a classic case of a cover story that just doesn't sit still.
At first, the story was that a military buildup was all about supporting the Iranian people. But, as the protests over there started to fade and the military presence only got bigger, that reason started to feel a little thin.
So, then, the story completely changes. All of a sudden, it's about Iran's nuclear weapons program. Now, what's so wild about this is that it came less than a year after we were told that Iran's nuclear program had been, and this is a direct quote, completely obliterated. So, the pieces just weren't adding up.
And then, believe it or not, the story shifted. Again. Nope, it wasn't the nukes that were supposedly already gone. Now, it was their ballistic missile program. This was the brand new threat that demanded immediate, serious action.
So you've got 3 different stories in a pretty short amount of time. And that begs the big question, right? Why does the official reason keep morphing? Well, according to this analysis, it's because none of those are the real reason. The moral justification is just a cover.
The answer, the source claims, is pretty simple. It's economics. Just like so many conflicts throughout history, the real driving force isn't about freeing a nation or stopping some superweapon. It's about intense economic pressure and the huge opportunities that come with it.
Okay, so if it's about economics, let's follow that money trail. The first big clue is this massive, almost existential economic problem facing the U.S. administration. It's creating this desperate need for a huge win.
And here's the number that kind of sets the whole stage. $2 trillion. That's roughly the annual deficit we're talking about. When you're running the country on a credit card at that kind of scale, you have a really powerful incentive to find massive, game-changing economic growth from anywhere you can get it.
And you have to understand, according to this analysis, this isn't just about balancing the books. This is about pure political survival. With elections always on the horizon, the administration's entire future depends on creating a booming economy that people can actually feel. Failure is just not an option.
So if you're the administration and you need a ton of cash fast, where do you go? The source argues that the strategy was to pivot away from the old, slow allies like the European Union and turn towards new partners in the Gulf who can move fast and, write enormous checks. And this slide, man, it just lays it out perfectly. On the one side, you've got the EU. It's an institutional grind, it's slow, it's full of rules and regulations. On the other side, you've got the Gulf states. These are sovereign countries. They can make top-down decisions in a heartbeat. And, as the source so bluntly puts it, they can write a big-ass check. It's not complicated, it's fast, it's transactional, and it's all about business and security.
And we're not talking about small change here. The financial power is just staggering. The Gulf states control literally trillions of dollars in their sovereign wealth funds. They've already pledged around $2 trillion for investment in the U.S., mostly for AI infrastructure. And in return, they want U.S. protection from Iran. And get this, 54% of the funding for America's top venture capital and private equity firms now comes from the Middle East. They are literally bankrolling the U.S. tech and AI boom.
Okay, so once you see that, once you understand that the whole U.S. strategy is built on this flow of cash from the Gulf, well, then Iran's game plan just clicks into place. It's not about winning a military battle, it's about winning an economic one.
Look, Iran's leadership isn't naive. They see this whole dynamic perfectly. They know the U.S. needs that Gulf money flowing into its tech sector. So their entire strategy is designed to brilliantly and brutally cut off that flow of cash.
So here's how they do it. It's like a 4-step economic attack. First, they can strike Gulf oil facilities and, this is key, the data centers that are the physical foundation of the AI economy. That forces the Gulf nations to spend their money on defense instead of on U.S. AI companies. Step 3, this spooks global investors, which threatens the whole AI bubble. And for the final blow, they can close the Strait of Hormuz, which would cause oil prices and inflation to absolutely skyrocket, choking the global economy.
And that's the whole game right there.
Iran doesn't have to win a conventional war against the U.S. military. They don't have to sink an aircraft carrier. They can win just by making the Gulf region seem too expensive, too risky, and too unstable for those big investment dollars. They win by destroying confidence.
Okay, so that's the geopolitical chessboard, but what does this all mean for you, for your wallet? Well, the source material actually lays out a very clear playbook based on how markets have always reacted to these kinds of shocks in the past.
You know, when stuff like this happens, the headlines get crazy, and it feels like the sky is falling. But if you look at the actual data from LPL research, going all the way back to Pearl Harbor, it's a different story. The average market drop is only about 5%. Even with massive events like the Korean War or 9/11, you're looking at drops of around 11 to 13%. So the initial hit is real, but it's often more contained than you'd think.
But here's the kicker. The bounce back is usually incredibly fast. After 9/11, the market was back to even in just a month. On average, it takes about 47 trading days for a full recovery. The pattern is so clear. A sharp, scary dip, followed by a surprisingly quick rebound.
So to really play this right, you gotta understand the 3 phases of any crisis market. Phase 1 is the shock. That's the first few days of panic selling, driven by emotion and computer algorithms. The smart move here? Often it's to do nothing. Selling just locks in your losses right at the bottom. Then comes phase 2, repricing. This is when the big institutional players step in and figure out what has fundamentally changed. This is your window. This is when you make your move. Because by phase 3, rotation, the money has already started flowing into the new winning sectors, like energy and defense. And if you're just noticing it then, you're already too late.
So what's the actual concrete move? Well, based on a Bank of America analysis of past crises, the pattern is really straightforward. In the first 3 months of a conflict, oil is almost always the best performing asset. Gold holds its value longer, but oil gets that initial spike. The advice is simple: trade oil, hold gold. And really this all boils down to one simple truth. The world we live in isn't always the one we're told about on the news. The people who get ahead, the people who have an enormous advantage, are the ones who take the time to see what's really going on behind the curtain, to understand the real economic drivers. And that leaves us with one last, really powerful question from the source. Markets don't care about morality, or good guys versus bad guys, or the stories we wish were true. They respond to structure and incentives. So it's worth taking a hard look at your own strategy and asking yourself, which story are you investing in?